In view of the recession, in view of the economic activity slowing down, how do you view this policy measure? Do you not think that it was time for them to revise down the interest rate?
The money supply since March of 2022 has declined by 3.2%. And that contraction is very unusual in the United States. We've only had 4 contractions ever in the history of the United States money supply.
The interest rates, the historically high interest rates that we've seen over the course of the last year, would that impact in any way the trajectory, the course towards recession or mitigating recession?
The way to look at this is not through the lens of interest rates. And monetary policy really is not all about interest rates. It's all about changes in the money supply. Yeah. So it can work indirectly through the money supply, but the big thing that is working on the money supply right now has been this so-called quantitative tightening of the Fed that's been in place for some time.
I mean, there are a lot of comparisons that come through what the US government could have done had it not funded or not been supporting these wars, financially backing them. So much domestically, internally that they could have achieved in terms of addressing.
I think war is the enemy. So I'm the best way to stop a war is to stop financing the war. So the war in Ukraine would stop immediately if the U.S. cut the funding. And I think also that things would change in Gaza, would have changed in Gaza. The rhetoric has been, we want this thing to stop as soon as we possibly can. Let's say the rhetoric is peace. The reality is war, because the U.S. has been financing it.
Hello, everyone. My name is Nauraiz Rana, and I'm an economist with the World Bank based in Washington, D.C. I'll be hosting today's program on New Wave, and joining me today, I would like to welcome back Professor Steve Hanke, who needs no introduction, but still I'll go through with the formalities. Professor Hanke is a world-renowned economist. He has served as an advisor to various governments and world leaders across Eastern Europe, South America, and other countries in the world. He was also on President Reagan's Board of Economic Advisors in the 1980s, and currently is a professor of applied economics and also the founder and co-director of the Institute of Applied Economics at the Johns Hopkins University. He's a complete expert on currency, inflation, economic growth, and whatnot. So we are very, honored to have him here on our show. So welcome back, Professor.
Great to be with you.
Thank you. So I guess I'll just jump right into it. The last time we spoke at length about how the US is looking into an impending recession. And in such a situation, you hope for measures that would tend to induce more economic activity in order to mitigate the impacts of the recession that's about to come. But what we've seen recently is that in March of 2024, that is last month, the Feds decided to keep the same rate of interest, the same interest rates that they had applied on the US economy back in July 2023. That is something between 5.25% to 5.5%. So in view of the recession, in view of the economic activity slowing down, how do you view this policy measure? Do you not think that it was time for them to revise down the interest rate?
Well, let's speak just for a moment about what kind of my forecasts and something in the work I do with John Greenwood, using kind of the quantity theory of money. And the idea there is that money dominates. Money is the fuel of the economy. So you have to look carefully at what's going on with the money supply. And actually, the money supply since March of 2022 has declined by 3.2%. And that contraction is very unusual in the United States. They're actually, we've only had 4 contractions ever in the history of the United States money supply. And we have to actually, one of those contractions was, we have to go way back, 1948, 49, there was one. And then there was another one in 37 and 38, and another in 29, 33. Of course, that was a huge one that led to the Great Depression. And then there was another one in 1920, 21. So we have to go way back in history to even find a contraction in the money supply. And what we find is that in each one of those contractions, we always had either a depression after the 1929-1933 contraction or a recession. So that is the frame that I'm looking at, and that's why I think we will have a recession late this year, or at least a significant economic slowdown will start. And my own view is that the Federal Reserve has been too constrained. They've kept the policy too tight for too long. It's still contracting on a year-over-year basis, contracting at about 2% per year, and to grow the economy and hit the inflation target of about 2%. Hanke's golden growth rate is about 6%. So it's still growing, contracting, I should say, contracting at a rate that's significantly below the golden growth rate. About 6%. 6% is a golden growth rate. It's minus 2%. So you've got a big gap between where it is and where I think it should be. So that's my broad view. However, if you look at the current economic data, the inflation hasn't come down as fast as I thought it would, and the economy is growing at a more robust rate than I thought it would. So it's kind of, shall we say it's taken a pause. The trajectory is the money supply is contracting, so the economy should start slowing down. Inflation should keep going down, but we've hit kind of a pause for the last 2 or 3 months. So maybe it's going to occur a little later than I thought it would.
Interesting. Yes,
the recession, that is.
Yeah, absolutely. I was just reading recently that as per a certain economic research, it is anticipated that the projected possibility of recession to hit in March 2025 is about 60%. So it is still pretty much, it is being anticipated that it is quite the inevitable, as you had projected, in our previous conversation, and even as you mentioned it today. But how do you think the interest rate factors into this equation? Because interest rate is one thing that has historically been commensurated by spurring economic activity, inducing greater investment, greater borrowing. But then with the interest rates, the historically high interest rates that we've seen over the course of the last year, would that impact in any way the trajectory, the course towards recession or mitigating recession?
Well, my view as a monetarist is that monetary policy, number one, money dominates. So money is important. And the way to look at this is not through the lens of interest rates. And monetary policy really is not all about interest rates. It's all about changes in the money supply. So it can work indirectly through the money supply, but the big thing that is working on the money supply right now has been this so-called quantitative tightening of the Fed that's been in place for some time. And that means that the Fed is shrinking its balance sheet and shrinking its contribution to the growth of the money supply. So that's the key thing is what policies are the Fed engaged in that are affecting the money supply. And so far we've had a squeeze. They just keep squeezing it.
Yeah, fair enough. So actually, I would like to, I think it's a great segue for me to pivot the discussion a little bit away from pure economics to political economy. So this is the election year, 2024. We know the US is going to be contesting, its general elections. And usually what we've seen in historical patterns is the government increases its spending when it's in the election cycle. And if you mash that up with the fact that March 2024 saw a fiscal deficit of $236 billion, how do you envision the U.S. government to, play out its cards that it has? Will it, print more money in order to, spend more and increase its government spending that it has? more towards development-oriented policies to sway the voters to themselves, and how are they likely to deal with the fiscal deficits that is accrued year on year and month on month?
Well, I think in terms of monetary policy, the Federal Reserve, which is theoretically independent, but of course in reality it's not. As you say, it's part of political economy, but it's somewhat removed, shall we say, from the White House. It's somewhat independent, and their concern is that the inflation rate has not actually in the last 2 or 3 months been falling. It's been kind of stable, or maybe up just slightly.
Yeah.
So I think they're going to be very reluctant to be, running the printing press, that kind of thing. I think they would like to, because they would probably like to satisfy Biden, the incumbent, who will be running for president. But I think they're going to be very cautious, and probably we won't see that much stimulative action taken by the Fed as a result of the impending election. Now, the government spending is another story, and that is both political parties seem to be very unconstrained about. They talk. The rhetoric is tough talk about trying to control a budget, trying to control a budget deficit. But the reality is they're spending money like drunken sailors. They're right now trying to get this more money, $60 billion, shoveled into the financing the war in Ukraine. And they're spending a lot of money supporting Israel in its war in Gaza. So I see no constraints coming from the government spending side. If they have any excuse and any opportunity to spend, they will.
Yeah. And how do you view that policy? I mean, there are a lot of comparisons that come through what the US government could have done had it not funded or not been supporting these wars, financially backing them. So much domestically, internally that they could have achieved in terms of addressing homelessness, in terms of addressing the educational gaps and health-related, weaknesses, challenges in the infrastructure that are often seen.
Well, as someone for many years who's been, I think war is the enemy. So I'm the best way to stop a war is to stop financing the war. So the war in Ukraine would stop immediately if the U.S. cut the funding. Yeah. And I think also that things would change in Gaza, would have changed in Gaza. The rhetoric has been, we want this thing to stop as soon as we possibly can. Let's say the rhetoric is peace. The reality is war, because the U.S. has been financing it.
Actually, that's very well put. Yeah.
So the rhetoric in the Middle East is not the same as the reality. It is in Ukraine, because the rhetoric is war and the reality is war.
Yeah. That's actually very, very put it rightly encapsulate the picture and the role of the US government and how it has evolved and shaped during the last 6 months and then the year and a half before that. And that is being funding and enabling these operations that have been happening both in Eastern Europe and then in the Middle East currently as we see it. So like pivoting back to the economy and the US elections, you do factor, I just wanted to have your take, like how much do you factor that among the various factors? How much does the economy, do you think, really influences the voters in voting for or against the incumbent?
I think it will influence the voters a lot. The big factor is that people know and remember, as they're looking in the rearview mirror, they know that inflation was running at 1.4% per year when Biden took office, and now it went, and then it went up to 9 point. It went up from the day he took office until it peaked in June of 2022 at 9.1%. And now it's slowly come down and is at 3.5%. So that's over double the rate which it was when Biden took office. And that's why, if you look at most of these public opinion polls, people are very annoyed about inflation. They realize that when you go to the store to buy anything, it's a lot more expensive than it was when Biden took office. So that is a big factor. The other thing that I think we're going to see in terms of action by the United States before the election will be populist things. And the populist things are like antitrust policy, like the U.S. is looking into Apple, for example.
Absolutely.
And the reason there is that their philosophy is very simplistic and kind of archaic, and that is that anything big is bad. Now, so anything big is kind of a target, and the populists go for that, and that's one reason they go for Apple. Now, they don't take into consideration, well, why is Apple big, or why are some of these tech giants big? Because they provide services that people like, and they provide them more efficiently and effectively than their rivals provide them. So I think there'll be antitrust continued. This is, but it will ramp up, and also protectionism. You can see this with China. China, it's a little bit like China is big and it supplies, for example, a lot of electric cars now. They're the cheapest and best electric vehicles you can buy. And now we see, both in Europe and the United States, the policy is, we have to figure out, you're big and you're bad, and we have to put tariffs on you, or we have to put quotas in, and we have to keep you out. So I think we'll see more protectionist activity, and we'll see more antitrust activity going into the election, and that's mainly a populist thing.
Yeah, absolutely. And that, like, if I may, I think that may be detrimental to the economy, because
absolutely, absolutely. Even the IMF has come out with a recent white paper indicating that these protectionist and industrial policies of the Biden administration, in particular, are very detrimental, not only globally, but to the U.S., which I thought was a fairly pointed critique of the U.S. and the Biden administration. Fairly unusual for the IMF to be that pointed, by the way.
Yeah, no, absolutely. That's very right, because the IMF is very in close ties with the U.S. administration, and there's a certain amount of lobbying that happens. But yes, and to your point, like, it's not just Apple. Even Amazon is one of the companies that was recently sued and is being sued by the U.S. administration for its monopolistic and oligopolistic policies. And speaking of which, I think at the end of the day,
by the way, that's the claim. I think Apple has very competitive policies. They produce things that people want, and they produce them at a low cost relative to their competition. So it's a competitive game, and Apple does well. Apple does very well. Now, the one thing that's interesting is that Apple has run into problems in China, but that's mainly because of U.S. policy. U.S. imposed sanctions on Huawei, the big producer of competitive products in China. And what's happened? Huawei's profits have actually gone way up, and they've pushed Apple a little bit aside in China.
Absolutely.
So that's actually coming from bad U.S. policy. These sanctions that they put on Chinese companies.
No, as we've established, and as I feel that various economists over the years have completely established, that any protectionist policies or any of those that tend to deter comparative advantage or competition are harmful, both in the short term as well as in the long term. And that is what is being witnessed in response to US policies that are pushing for greater protectionism, and as they have done so in the past.
Right. Right.
Yeah, and then to your point, I think it was very beautifully put that at the end of the day, the common man doesn't really understand all the economic fundamentals, how things are working. But what they do understand is the experience that they are put through, and the inflation is, a direct metric or a direct feeling of various sentiments. When it was 9.5%, it was the purchasing power was cut, was slashed hugely. And that's what they have experienced over the course of the Biden administration, which to some degree, the repercussions would be felt by the Democrats in the upcoming elections.
Right.
And
Right.
yeah,
Absolutely.
yeah. And then, okay, so one other interesting topic that I wanted to get your 2 cents on, and that is something which honestly is a lot of traditional economists tend to grapple with, and they don't really understand the phenomena, and that is the phenomena of cryptocurrency. Bitcoin is something that currently is trading closer to 70,000 USD in the market, and it is being labeled as the new gold, the digital gold of all its various use cases, store of value, hedge against inflation. What is your thoughts about that?
Well, as far as Bitcoin is concerned, I think it's a highly speculative asset with zero fundamental value. I've always said this, and you say the price objectively is, as you say, is around $70,000 now. It's gone up a lot this year.
Yeah.
But again, it's just speculation. You said hedge against inflation. Bitcoin's not a hedge against anything. Bitcoin is like going to Las Vegas and playing the slot machines, and right now you're winning, but tomorrow might be a different story. So if you actually have Bitcoin in your portfolio, you add an enormous amount of risk to your portfolio, and that's because of the gambling aspect. So the idea that it's a hedge against anything, no, it's a way to dramatically add risk to your investment portfolio. And if you want to do that, that's fine. I don't have any problem with that. But people have to realize what it is. It is not a hedge. It's a speculative asset, and right now, it's up strong this year.
Yeah. No, full disclaimer and disclosure that that's not what I feel, or that's not my claim. This is what the digital asset pundits tend to claim, that it is a hedge against inflation and it is the new gold and things like that.
Well, that's the advertising hype of
yeah.
and right now, by the way, see, the hype is pretty good, because
Yeah.
those who have invested have made a lot of money in the last 3 or 4 months.
Yeah, absolutely, absolutely. So no, it's great to have your thoughts on that, and I would reckon that people would pay a lot of heed coming from someone who's such a tenured economist and who spent years in the field studying currency and studying the economy. And just one last question, one last topic that I want to touch upon before we wrap this up is related to Pakistan, actually. And you've been very vocal, and you tweet quite often about Imran Khan and the Pakistan political dynamics. And one thing, again, coming back to political economy, is that the general elections took place and the coalition government between PMLN and the People's Party came to power. But one thing that elections they represent is the fact that when they are autonomously and legitimately held, they they accord the newly formed government the trust and the confidence to take tough economic measures. But in this case, there are a lot of questions around the legitimacy, and which may hamper or limit the government's ability to take those tough key economic decisions. How do you view the entire episode? How do you look at this entire thing?
Okay. So let me, before we jump into Pakistan, and let's go back slightly to the cryptocurrency thing. You mentioned the new gold. Well, one thing we didn't talk about is gold.
Yes.
Now, unlike cryptocurrencies, gold's been around for thousands of years and always been part of the international monetary scene. And today, as we're speaking, gold has just made a new high. So gold's been on a huge bull run too, and I've always liked a little gold. So so this is not a speculative asset. This is a real currency that's been with us for thousands of years, and it happens that it's been performing and is very strong right now, and has hit an all-time high today.
Yeah, so if one is to invest in long-term holdings or in long-term assets, then gold is definitely much
Well,
is would more desirable
right,
than any digital currency.
gold would be classified not only as a currency but as a potential hedge.
Absolutely. No, thank you for pointing that out.
If you have gold in your portfolio, it's not increasing the risk profile of the portfolio, it's reducing it.
Oh no, I think that's a great point to take away.
Let's jump in to Pakistan for just a minute.
Yeah.
So it's really the last election and the imprisonment of Khan, I think is in both cases scandalous, and I think more generally the international scene, shall we say, community, whatever you want to call it, is pretty much seeing it that way. I mean, I think it's really, the whole thing has given Pakistan a very black eye. Pakistan, people realize it's a very, very poorly governed country, without much legitimacy of any of the governments, because in fact everybody realizes the military runs a show.
Exactly.
And you know, this old line, either you run the show or the show runs you. Well, I think the show is run by the military, and the show is running Pakistan, which unfortunately, I think, puts Pakistan in this category of what we used to call third world.
Yeah, unfortunately, that is the truth.
And if you look at who they're competing with in the region, for example, who's always a longtime competitor? It's India. India is looking pretty good. I'm not saying, I'm not making any judgment, by the way, about the governance of India, but just the general economic scene,
exactly,
and how India is being perceived by the international community versus Pakistan, and it gets back to this legitimacy thing that you're talking about. So if we go through the 5 pillars in economic policy are taxes, and the tax system is a mess in Pakistan. The government and government restraint on spending and control the budget, it's not good in Pakistan. The monetary and currency situation, that's number 3, that's not good in Pakistan. The regulatory environment is a hodgepodge and is a mess. I mean, you go try to figure out what all the regulations are in Pakistan. It's impossible. The experts don't even know what's going on. And then the last thing, international trade. Now we've talked about this with protectionism, and there you've got a very protectionist regime in Pakistan with all kinds of restrictions on trade. So the general picture, looking at it from kind of a technical point of view, is not good. And as long as Khan is in jail, my view is you can forget it.
Yeah. So you do feel that a strong leadership and an independent autonomous leadership is the one necessary instrument tool that is needed for a country to flourish, even economically.
Yes, even economically, and that's true in principle, and in practice, if we look at Pakistan, as long as Khan is in jail, Pakistan's not going anyplace because of this whole legitimacy thing. You can't have a country in which clearly the majority of Pakistanis, if there would have been a free and fair election, they would have voted for Khan.
Yeah,
He,
absolutely, yes.
he'd be running the show right now. He might not
Yeah,
be running the show, but he, he'd
yeah.
be in the place of the leader of the civilian government. Now,
Yeah,
whether he'd be able to push the military aside is yet another issue.
yeah. I know. I mean, there's no doubt about his popularity, and it's given from the fact that despite all the hurdles that were created, both before the polls and on the day of the elections, his members associated with his party, despite the fact that they were stripped of their electoral symbol, they still were the most. They came out winners. That was the most popular
Right. Well,
party to win the
now
majority of the seats.
let's go back to these 5 pillars. So the last time I spoke to Khan on Zoom was we spoke for about an hour and a half. It was back in April of last year, before he was thrown in jail, and let me assure you, he has some sound economic ideas that if he was in the saddle, I think he would be trying to clean the stable and
Yeah,
clean up some of these things. So that is a concrete statement, not a theoretical exercise on my part. We have talked. He understands the need for reform in these areas, and I think he has a pretty good grasp of what to do. But
yeah.
he's fighting for his survival in jail.
I mean, an endorsement coming from you that you feel that his economic principles, his ideas are very robust. I think it's quite big and it's quite huge. Like I said, from an
Yeah,
economist who
I
spent
think
years in the field coming from you, yeah,
I
it's a
think
huge endorsement.
I think there's no question about it. I think he would embrace the kind of reforms that are required to put Pakistan back on the right economic track.
Perfect, awesome. I hope so. I hope free and fair elections tend to take place where no one's is made a political victim, as is the scenario at the moment, and Imran Khan and his party are allowed to run as is any other party, so that the due course of democracy can take place in the country.
Well, let's keep our fingers crossed. And
Yeah.
and as we wind up, I understand you've been accepted into the doctorate program at Johns Hopkins University, where I'm a professor. So let me congratulate you as we wind up our interview.
Thank you so much. I look forward to working at the university and also making the most of your guidance and your support that you have to offer.
Look forward to seeing you not only on Zoom interviews in the future, but as a student.
Absolutely, absolutely. Thank you so much, Professor Hanke. It was
Yeah.
lovely having you here, and thank you so much for your time once again.